If you've been watching the Vancouver housing market lately, you probably sensed a bit of a shift because, as I'm sure you know, when you drive around, it's pretty hard to ignore more listings are sitting longer. Sold signs are getting rare, and there was a joke going around about a week ago that the sale sign companies or the sign companies ran out of signs because there were so many active listings in the greater Vancouver area. So if you've been hiding under a rock or just curious to the latest, at a high level, prices are still coming down. Inventory, well, you've heard it, it's climbing, and more homes are sitting on the market every day. And I kind of have a suspicion that many homes will be coming off the market here pretty soon as nothing's selling here these days. But before we get into all of that, if we haven't met, my name is Richard. I'm a Canadian real estate agent, and I'm just passionate about helping you understand what's actually going on in the housing market. My videos are all about Canadian real estate, so if you like that and you want to stay up to date, give this video a like and subscribe to the channel. And so starting things off, we're going to be looking at the all residential properties, so the home price index. And this is basically all of the residential properties. We're talking condos, we're talking townhomes, we're talking detached properties. And so what I find interesting is just to provide you with at least a couple months of data, just so you can see the trend, right? It's hard to see what's going on with just 1 month. And so wanted just to provide you a couple months, at least 3 months back. And so we can see here April 1.184, down 0.5% from the previous month, and then so on and so forth. It looks like it's June, it's down to 1.173. So again, we're seeing a constant decrease in the overall home price index when you're talking about Vancouver. And then this little blurb here down below was just from the Vancouver Real Estate Board, and thought I'd just put it in here as well and just read it to you here. The MLS Home Price Index benchmark price for all residential properties in Metro Vancouver is currently 1.173,100. It represents a 2.8% decrease over June of 2024 and a 0.3% decrease compared to May of 2025. And it's interesting when you look at like the broader or long-term metrics, you can see that home prices have been continuing to decline for quite some time. How far they're going to go down, how drastically they're going to go down, well, I'll just have to wait and see with that one. Then we're moving on to new listings. And so it's just the type of activity we're seeing in the market. And so April saw 6850, which is a decrease from last year. May saw 6620, which is an increase. And then actually June, even though there's less listings in the market, it's kind of typical when you think about the seasonal aspects of just real estate in general. Springtime, you see a lot more listings. When you get to the peak of summer, well, everyone's on holidays or out doing stuff. And so this kind of makes sense in my opinion, but you can see that we're 10% more new listings. So this isn't active listings, this is new listings. So there's a lot more new listings hitting the market. And then the blurb down here, there were 6,315 detached, attached, and apartment properties new listed for sale on the MLS in Metro Vancouver in June of 2025. This represents a 10% increase we've seen there compared to last year. This was a 12.7% above 10-year seasonal average. And so what we're seeing right now, and it's in the news, it's in the media, that there's a lot more listings on the market. And we're going to get into that in the next slide right here. Sorry, the next slide. But you can see that there's a trend of a lot more inventory hitting the market. And so this next slide here, comparing these sales. And so we've looked at the current price, we've looked at the new listings. And so what's happening with sale prices right now? And so as you can see, sale prices, number of sales, I should say. And across the board, you can see that we're down in sales. And this shouldn't be a shock to you. We're seeing a lot less sales. It's just there's lots of uncertainty in the market right now. And the Greater Vancouver Real Estate report that the residential sales in rural regions 2181 in June of 2025, 9.8% decrease from June. This was 25.8% below the 10-year average. And so we have, going back to this slide, we have a 12.7% increase in new listings. And then we have, sorry, my volume was on there. We have basically a decrease in sales. And so it's kind of painting a picture that not much things is happening here. And this is the total inventory. This is what I was wanting to get to. And May we had 16,207. Sorry, April we had 16,207. May we had 1794, and then June we're at 1756. And you can see here across the board, year over year, for the last couple of months, we've just seen crazy amounts of inventory. hitting the market here. And then going down here, the total number of properties currently listed for sale on the Metro Vancouver was that. We've seen that up, increased by 23.8% from last year. And then this is a 43.7% above the 10-year seasonal average. And so we have almost double the 10-year average when it comes to total inventory. Then we come to sales, we're down 25.8%, the 10-year average. Prices are starting to slowly come down. And so we're going to get into that a little bit later here, just a graph of where the prices are at right now. But it leads me to the question of like, what is going to happen here in the next couple of months to really a couple of years? And so that was the total inventory. Moving on to sales to active listings ratio. And so this is always the interesting one. This is what I want to remind you. Seller's market typically is going to be 20% higher. So basically all you take is the total amount of active listings. You divide that by the amount of sales that happen each month. And then you get basically this number here. Seller's market, basically meaning the higher the number, the more properties are selling. So 20% or higher, it's the seller's market. Balanced market is between 12 and 20. Buyer's market is 12% or lower. You can see over here, between April, May, and June, we're all just slightly above, but we are decreasing down. So by this standard, it's a balanced market, but I wouldn't believe it. In my opinion, it's far greater a buyer's market than it is a seller's market. Get into the numbers, the description down here. Across all detached, attached apartment properties, the sales active listing ratio in June is 12.8%. Have you seen that? By property type, the ratio is 9.9% for detached homes, 16.9% for detached, and 13.9% for apartments. And so you can see that the detached is well into buyer's market. Apartments is basically coming there, and it's actually the townhomes that are holding, as per this metric, holding the most. And so this leads me into what I want to talk to next is just break down the data, detached, townhome, and apartment, because all that data beforehand was just, the total market. And so what's actually happening market by market? Well, detached house stats right here, we can see at the top here, prices have continued to slide down. Sales they're kind of just hovering around the same. I know April has seen quite a bit less, but June and May kind of picked up a bit, but it's kind of steady. And then the sales to active listing ratio, you can see that it's just hovering around the 10%. And so it's definitely heavily in favor of buyers. And so sales in the detached market in June of 2025 were 657, 5.3% decrease from previous month. The benchmark price is just about $2 million. It's 3.2% decrease from last year and a 0.1% decrease when compared to May. Yeah, that's kind of the stats for the detached house market. Now we're going to move on to the attached. So we got April, May, June. So prices seem to be somewhat steady. Like they've gone up a little bit in May, down a little bit in June. Sales are relatively the same, but we are seeing quite a big difference, a shift, I should say, in the sales to active percentage. So less homes are selling as per the actives in the market here. So just reading on here, there was a 3.7% decrease from last month in sales. And then there was a 3% decrease in price from the previous year, 0.3% decrease when compared to May. So that's attached. And then the last section I want to talk about is the condo and apartments. So at the top here, we can see that prices are, they're coming down. No question about that. Sales, there seems to be less sales happening month over month. And so, which was resulting in, the sales to active percentage creeping more and more towards a buyer's market, quote unquote, what the board says. But in my opinion, it's well into a buyer's market in all segments, really. But reading on here, sales of apartment attached homes, reached 1,040, which is a 16.5% decrease when compared to last year. Benchmark price is 3.2% decrease from last year as well. And then there's 1.2% decrease from May. And so what we can see here is there was roughly like 3% on each one. Yeah, basically it's been about a 3% decrease in every segment. The question begs is how much farther are they going to be going down, leading more and more towards less sales in the market? Now that we have an idea of like what's going on, from a graph and statistics perspective, I just wanted to see and comment on what the real estate board in Vancouver has been talking about. And so, home sale trend stabilizing in June. So we've kind of seen that in the data there, where the sales have somewhat stayed the same. But let's move on here. After a turbulent first half of the year, home sales registered on the MLS are showing emerging signs of recovery, down 10% year over year, halving the decline since last month, showing signs of recovery. Well, stabilizing isn't really recovering. On a trended basis, signs are emerging that sales activity is around the corner after a challenging first half of the year, with the year-over-year decline in sales in June halving the decline we saw in May. If this momentum continues, it may not be long before sales are up year over year, which could mark a shift towards a market with more demand than the unusual low demand we've seen so far. Yeah, of course, if we continue this trend, well, yeah, then it's going to be a better market. But I just don't see that happening, right? So let's just move on here. Analysts of historical data suggest downward pressures on home prices occur when ratios dip below 12% for a sustained period. And so they're talking about the active to sales ratio that we shown earlier, how like collectively as a whole, it's about just over 12%. I think it was almost 12, 13%. When we look segment by segment, like detached homes was well below 12%. And so they're saying, well, if we have sustained pressure, well, then prices should decrease. And then moving on here, while homes often experience upward pressure when surpassing 20% over several months. And so this kind of confirms that sales seem to be somewhat stabilizing, but we're having a lot more inventory hit the market. And so even though the numbers have stabilized as far as sales go, there's just a lot more inventory on the market. And so as home sales regain their footing, inventory levels aren't building as quickly as we've seen lately. And that's kind of an interesting thing as well, because when you look at seasonally speaking, we have a ton more listings in the beginning, the first, let's say quarter of the year, and maybe like the second quarter. Seasonally speaking, this is what normally happens. Less listings hit the market. Yes, they're not building as much because that doesn't happen this time of year. Most markets segments remain in balanced conditions, which has generally kept prices trending sideways since the start of the year. With over 17,000 listings on the market right now, and with mortgage rates down around 2% since last summer, buyers are enjoying some of the most favorable conditions we've seen in years. And so I will agree with that there is more favorable conditions. Prices are quite a bit higher than obviously if you go back even farther, which that's another whole story. But we are seeing more favorable conditions. And so this is the graph that I was talking about that I wanted to show you here, which as far as real estate prices in Vancouver here. And you can see that the detached, basically apartments, and the attached market, detached has taken quite a substantial hit. And so it's just a matter of how far that's going to go down. And then the attached market, it's kind of at the crest here, and it starts to be going down. And the interesting one is the apartments. It seems to be holding steady. It's just for how long, right? Nobody knows, but it'll be interesting to track this and just stay informed of what's going on. And so we've obviously talked about a lot here, but what does this actually mean for you? Like, what should you be doing? And so if you're buying in 2025, I got a few bullet points that I think are going to be important for you just to listen to. And the first one just being more listings. We have a lot more choices on the market. We've seen that in the data. It was up like 25% of active listings. Yeah, active listings from last year. You got choices, right? And so, which means you have less competition and more time. And so you have time to go look at the properties, go look at all of them. By that time, the one that you first looked at probably hasn't sold yet. And so you have time to do your due diligence, and sellers are more negotiable, or they have to be, right? There's a sea of options for you. Kind of pick your terms and just be stern with them, because sellers do have to be more negotiable, and prices are trending downwards. And so this is the big question: do you buy now, or do you buy in a couple months from now, or a couple of years from now? Who knows how far the prices are going to go down? And if someone does say they know, well, they're lying to you, because nobody knows. But they are trending downwards. And so what I would say, it just depends on your situation, what you have going on in your life. If you need to buy now, well, hey, you got lots of options. But if you can wait, maybe it's worth waiting till the fall, till the winter, when seasonally speaking, it's a better time to buy, because prices are lower, No one wants to move during the wintertime, so you can kind of capitalize on just a softer market and just the time of year. And then it's important to get pre-approved. Even though you have all these options, you have time, you just want to get pre-approved so you're not looking at houses that are above what you can afford, right? There's nothing worse than going to see a house and be like, wow, this is amazing. And then you can't even afford it. And so go get pre-approved and go to a couple people. Like I literally just had a client last week that told them everything was good. It's good to sell your property. And then they talked to another mortgage lender and it's like, no, you're actually gonna be taking a huge penalty, this, and that. It's unfortunate, but like you need to talk to multiple ones, or at least talk to someone who's been vetted by a good friend or a good, someone you know. So those are my thoughts. And then if you're thinking about selling in 2025 here in Vancouver, maybe now or again in a couple months from now, this is going to be what I think you need to be doing. So you need to be priced it right from the start. We're seeing this trend where prices are going down. And so the question is, do you want to be ahead of the curve, or do you want to chase the curve all the way down for a year, let's say, and really lose out? And we've seen this time and time again. Is this what's going to happen now? Again, nobody knows, but you need to be the best house in the neighborhood and the best house in the city. And so those are my thoughts on pricing. And then you need to make your home stand out, right? You need to be the best option, like I mentioned earlier, in the city, in your neighborhood. And so fix what's broken. When someone walks in, they like the handle and the door handle's loose, or like a fence thing is broken, or there's like paint peeling off somewhere, or it's just fix things that are broken, because then that showcases to the buyer that, hey, it shows that you've taken care of it. And so fix what's broken, and then be ready for longer sale times, right? The days on market, they're increasing. There's a lot more inventory. And so just expect to be waiting a little bit longer. An option would be just to price it well below market value. I don't recommend that all the time, but it's an option if you want a quicker sale. And then you need to be flexible on your terms, because again, you're competing against a sea of houses or apartments or townhomes. The reality is you're going to have to be more flexible. And so if it's whether that's dates or whether that's conditions on the contract, just be aware you're going to have to be more flexible. And then you need to know your reason for selling. I think this is an important one. You don't want to go through all the hassles of open houses, showings, leaving your house, getting it ready, and then for you to be like, you know what, I don't want to sell anymore. Or you know what, it's no longer an interest of mine. And so do your due diligence, hang on to the reason of why you're selling, because it might get bumpy. You might take some time. There might be some contracts that fall through. You might get annoyed. You might get pissed off. So just know your reason for selling. And so I'm curious on what you guys think is going to happen here over the next couple months in Vancouver. We've looked at a lot of data, right? There's lots going on. And hey, if you need any help with that, or if you need some guidance, I'm more than happy to help. I actually live just outside Greater Vancouver. So if I can't help you, I know someone who can. I got lots of connections in Vancouver. And if you want to stay up to date with what's happening in the market here, make sure to like and subscribe to this video so that the algorithm pushes this content, or you see it next time I post next month's Vancouver report. But as always, I appreciate you watching, and I'll see you in the next one.